Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Rotation underway. Well, the overall stock market has continued to grind higher and has finished out what has been an impressive first quarter for 2024. Most investors have associated the recent rally with the largest technology stocks and AI-related names like the chipmaker NVIDIA. And those stocks have indeed turned in an impressive performance, starting in the bull market that began back in late 2022. However, more recently, other sectors and companies have begun to show some relative outperformance. In fact, technology is actually only 7th out of 11 sectors so far year to date in performance. It's actually down 1% in the past week, even with the broad market higher, and the former market darling Apple is down more than 10% so far this year. Another Magnificent Seven member, Tesla, is down close to 30% so far in 2024. Meanwhile, energy stocks have been on a tear, up roughly 13% in the first quarter, and other laggards from 2023, like small company stocks, have recently started to show some signs of life as well. Now, it remains to be seen whether this is just a temporary quarter-end reallocation by money managers, or if a more durable shift in market dynamics is now underway. We're leaning toward the latter. For this week's featured insight, FOMO is a no-no. Well, the post-COVID stock market has been driven by a lot of FOMO. That is, the fear of missing out. We had the whole meme stock saga, remembered most by the meteoric rise in GameStop shares due to a coordinated short squeeze. Crypto went through several boom and bust cycles. And remember NFTs? I'm sure anyone who bought those would like to forget. Now, a flood of cheap, or in some cases free, money, social media and high-frequency trading platforms have all come together to drive epic price moves in various financial instruments. Nevertheless, most of these types of situations that are driven by price momentum and a fear of missing out by those that think they're being left behind while their friends get rich ultimately end in a trail of tears. So don't get sucked into the FOMO. Looking ahead, employment report incoming. The month of April is about to begin, and the first Friday of every month is always the widely anticipated non-farm payrolls report. Now, job growth has been in somewhat of a Goldilocks range, good enough to signal the economy is on stable footing, but not too strong as to signal accelerating inflation. Now that the Fed has essentially promised 3 rate cuts this year, there could be some modest risk that a strong report will call into question whether or not they can deliver on that promise, especially given some of the recent inflation data that's been a bit hotter than expected. Now, on the flip side, the consensus of economists and market participants now believes that the economy is on a good trajectory, and the prior calls for recession have all but faded away. Therefore, a weaker than expected jobs report could cause a reassessment of those outlooks and create some near-term market volatility. I suppose we should hope for more Goldilocks next Friday. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.